So we're pretty close to that 4% fall on the ASX 200, a very substantial drop, the biggest one since Donald Trump introduced his so-called Liberation Day tariffs, and we could even get to that level given that the markets kept declining over the course of the morning. Australia's not alone. The Nikkei is also down 6.1% in Japan, so we are seeing some pretty steep falls around the region. Countries like Japan and also areas like Europe are particularly vulnerable to restrictions in energy supplies. Korea also heavily affected by those reductions in oil output from the Middle East. We did see the US markets fall 1.3% on Friday, and the US futures are pointing so far to about a 1.8% decline on the US market when it opens tonight. But the falls in the real Australian market have been much bigger than the futures implied. We've also seen Brent crude oil, as you mentioned, rise by more than 20% at one point, peaking at $111 a barrel, still about 18% higher, close to $109 a barrel. And on the Australian market, almost all of the market is down. 192 of the top 200 stocks were in the red just before midday. Only 7 were higher, and all of those were energy producers.
Okay, understandably. So why the sell-off? Is this just about the oil crisis, or are there other areas?
Look, that is the key driver of this. We've seen a Bloomberg index of commodity prices rise to a peak that's now above the level we saw after Russia invaded Ukraine. So we're starting to see the market price in the risk that energy prices will remain above these $100 a barrel levels. There are some economists warning that if they remain this high persistently for many months, that we could see global growth fall by 0.6% this year compared to what it would be otherwise, and that we could see inflation 1% higher than it otherwise would be without this spike in energy prices. We're already seeing Iraq virtually cease production in its southern oil fields because it can't ship the oil and storage is filling up. And we're seeing the UAE and Kuwait also cut production as their storage facilities fill up. And the longer the Strait of Hormuz is closed, the more energy producers will have to cut back production. We're also seeing some of the major LNG facilities in the region scale back production and prepare to shut down, again, because they can't ship the output.
You mentioned the impact potentially on inflation there. How could that flow through to rates here?
Yes, well, we've already seen concerns in the US about stagflation. We saw figures out which spooked the market there on Friday about jobs, a fall in US non-farm payrolls and a rise in the unemployment rate. And if you have that lower economic growth and increasing unemployment hitting against rising inflation, it really snookers central banks, not only in the US, but potentially here in Australia as well. They can't really cut rates into surging inflation, which is being driven by energy prices, but at the same time their economies may be struggling and hit harder by the rising costs that these energy prices entail.
What are some of the analysts calling on just how far the market could sell off?
It really depends how long the strait is closed for, and that's why comments like Donald Trump's that we heard earlier are really spooking investors, because it doesn't sound like he's backing down. We have seen since the Trump tariffs, the taco trade, Trump always chickens out, but investors seem suddenly to have become spooked that this may not be the case with Iran, that Trump's in it for the long haul, and that the Strait of Hormuz could be closed for many weeks, and facilities in the region could take months, if not longer, to recover to full production.
This is how long is a piece of string question, Michael, but how long could this volatility on the markets last?
It really depends how long the conflict in Iran lasts and how wide it spreads around the region. The real panic is now that we've seen those pictures of oil and gas production facilities being hit, and also the Strait of Hormuz effectively closed because it's now too expensive to ensure any ships transiting through that area. So as long as the strait remains closed, the storage fills up, there's no way to ship oil and gas out, production gets dialed back, and you now get to the point where even if everything resolved, it will take many weeks and potentially months to return to full production, because once you shut down some of these oil fields, and particularly the LNG facilities, you can't just switch them back on overnight.
No. Michael Yander, many thanks.
Thanks, Kath.